In the previous update, I mentioned a WXY had the highest probabilities, and according to that scenario, we were looking for price to move towards the upside. As price moved up and took out this high, it's interesting to look at Bitcoin once again and update the different scenarios. From an Elliott Wave point of view, the probabilities would still slightly be in favor of an unfinished WXY because of time compared to a finished WXY. The reason why will be explained in this video. Starting with an unfinished WXY, where we basically look at a bigger sideways structure before then continuation to the upside. Wave W here is counted as a zigzag in a wave A, B expanding diagonal in a wave C. Wave X can be put on two places. Either this high over here, which was made on the 20th of June, 10 a.m. Central European Time, or a high yet to be determined before you get wave Y to the downside. If you put wave X on this high here on the 20th of June, wave X is counted as a triangle. Now that has big implications on the expected price action of wave Y, because in a sideways WXY, wave Y can only be a zigzag, flat, or a triangle. But if wave W is a zigzag, wave Y cannot be a zigzag. If wave X is a triangle, probabilities are very low, wave Y is going to be a triangle, and therefore the only scenario really in a wave Y would be a flat in a wave A, B, and a wave C. Now the minimum target for a wave B in a flat is the 0.9 Fibonacci that you take from the start to the end of your wave A, which has been touched. A common target for a wave B is the 1.236 to the 1.38 Fibonacci, giving you a target between 108.5K and 109.7K. The reason why this is a common target is because, according to the theory, an expanding flat is the most common flat structure, and wave B in an expanding flat tends to retrace to this area. If price continues towards the upside and touches the 1.618 at 111.7K, the probabilities for a flat will significantly decline. Mind you, by the way, that wave B in a flat structure has to be a three-wave corrective structure and commonly is a zigzag or a double zigzag. Now, because price over here already took the origin of wave A, I wouldn't really be looking for a zigzag anymore in a 1, 2, 3, 4, 5, wave A, corrective structure in B, and another move up in a wave C. Preferably for a simple zigzag, your wave A over here inside B is not going to take out the origin of your higher degree wave A. It would be much better to get a wave A, wave B, and then wave C takes out that high. Therefore, on the lower time frames, one maybe has to consider a WXY. At the moment, of course, here on a 4-hour time frame, it looks a bit 5-wavy. But that then brings us to the second option, which is moving wave X up here, and then look for a yet to be determined high before a wave Y to the downside. In that case, your wave X is going to be counted as a flat and then a wave A, B, and a C to the upside. 1, 2, 3, 4, 5. After 5 waves, look for wave Y to the downside. Now, because wave X is then counted as a flat, not a triangle, wave Y can be both a flat as well as a triangle. So you would have your wave A, B, C, you finish wave X, and then a flat would look like this. You get your wave A, you get your wave B, and your wave C. And it would be quite interesting actually to create a lower high, right? Get a double top, grab the liquidity with that B, and then move to the downside in a wave C. Just interesting from a liquidity and psychology point of view, maybe even grab the liquidity of the all-time high and then drag it to the downside. Alternatively, a triangle, of course, in wave Y, then A, B, C, D, E, and then you move towards the upside. The conclusion is the same, right? I mentioned in the previous update as well, the probabilities are higher that this structure here is corrective, not impulsive, which basically means that the probabilities in general are higher to move towards the upside and continue the trend at a later stage. So still looking for all-time highs, right? We're just trying to deep dive into this range and figure things out. Now then we get to the finished WXY. Now in this particular case, we have a double zigzag. So A, B, C, and W, that's the same ABC. Wave X here is a triangle shown in detail, A, B, C, D, E. And then wave Y is a zigzag, A, B, C, moving to the 0.618. Now the 0.618 is a common target for a zigzag family structure after a triangle in the connector wave. So in a simple zigzag ABC, if B is a triangle, then wave C tends to move to the 0.618. Similar with a double zigzag. Wave X, however, did touch the 0.7 Fibonacci. And that decreases probabilities for a double zigzag, but it is not an invalidation. So therefore, we have to be aware of this scenario. Now, in this particular case, if this is the end of a WXY, you're going to be looking for all-time highs, or at least for price to touch the 0.9 Fibonacci. Because a bearish scenario after a finished WXY would be a bigger flat in a wave A, wave B, wave C, where the 0.9 is the minimum target for a B at 110.6K. The bullish scenario is, of course, quite simply continuation to the upside. But price does not tend to move in straight lines, right? It creates ranges and retracements. Now, there's two options for the bulls if your wave Y is finished and we look for impulsive continuation. Either a simple 5-wave impulse to the upside, 1, 2, 3, 4, 5, get a retracement and then continuation to the upside, right? Or 1, 2, 1, 2, 3, 4, 5, 4, 5. Likely you're going to take out the all-time highs in that case, and then after your wave 5, you're going to be looking for a bigger retracement to the downside. It very much depends on the local price action, especially this move to the upside over here, as preferably the volume in your wave 5 is lower compared to your wave 3. So at the moment, you can see over here that volume is decreasing. That's something you like to see when we compare wave 3 and 5. But if a price is going to continue towards the upside and volume eventually increases, we have to be aware of a double 1-2 at least. A side note, right, as well, is that wave Cs, for the potential ABC in X here, ABC, wave Cs do have a tendency of ending on a high amount of volume. So by all means, it's definitely an area to be aware of and to trade safe. For moves to the downside, what I would need to see is weakness and a change of structure, maybe some bearish CVD, touch some solid resistance, right? I would need at least a bit of a move to the downside. If you get a move down and then a 3-wave correction, that's an interesting short, right? But as long as price is just doing this here, it's too risky for my liking. It doesn't fit with my strategy per se, right? My way of trading, I suppose, from an Elliott Wave point of view. So I'd be very patient here comparing these different options. Now then, I like to shortly cover this scenario. I've seen this one in Discord and places, and I like to explain why this specific WXY has lower probabilities than the one that I showed, right? So again, this is a double zigzag WXY. This is Y, this is W. Yes, I do realize wave Y is short in time, right? Take a fib time from the start to the end of W to the end of your wave X. Wave Y is shorter than the 382. Time, however, is not an invalidator or a confirmator, if that's even a word, confirmation or invalidation, right? It's just something that can influence probabilities, but structure always comes first. Here, time might be better, wave Y, wave W, but the problem is structure, right? So in the scenario I just showed here, time might be a bit of an issue, but that's okay, right? Structure comes before time. Here, structure is an issue, not time. Time is okay, the structure is the problem, and I'll explain why. So this is a bit of education. So here we have the same zigzag in W. This is again a double zigzag as well, and then you have a zigzag in a wave Y. But how do you count a high probability zigzag in this structure? Question mark. So let's cover it. You need a wave A, you need a wave B, you need a wave C, right? You can only have a simple zigzag in a wave Y. Wave A, in this particular case, has overlap here. So if we go to a 1-hour time frame, then you can see that we have a move down, range, and then a sharp move down. If we want to count a 5-wave structure in here, this has to be your wave 4. There is no other like wave 4 that is at least getting close to the size of the potential 2. But you can see there's overlap between this low and this high. Now, if this is the low of a wave 1 and this is the high of a wave 4, this is an invalidation for an impulse. For a diagonal, you do like to see overlap between 1 and 4, but I'm not counting any diagonal here. It's very sharp to the downside, and preferably a diagonal, right, is more of a grinding structure, right, like a bear flag or a bull flag, as people like to somewhat call it, right, instead of such a sharp move to the downside. So one prefers impulses. Now there's a bit of a gray area, which states that if this is price action of a wave 2, which means 1, A, B, C, 2, and then a W, X, and then a Y, in your 2, W, X, Y, inside your 2, then this low is a wave B in a flat in W, which means that wave 2 overlaps with wave 4. And as per Elliott Wave International, it's only a strong guideline to not see overlap between wave 2 and 4, but it's not a rule to not see overlap between 2 and 4. So in other words, overlap between wave 1 and 4 is an invalidation and an impulse, but overlap between wave 2 and 4, yes, there is a strong guideline to not see it, but it's not a rule. So in other words, it's not an invalidation, but there is overlap. And of course, therefore, it does affect the probabilities from an Elliott wave point of view, because a strong guideline would still say it's rare, right? It's not something you like to see. And then if we end our wave A, right, we get to our B and C combination. If we move wave B to this high here, then wave C has to be some sort of a diagonal structure because of all the overlap you have here, right? Between the ranges, move down, range, move down, range, move down, range. At no moment in time did we have a very clear gap. Even here, you have overlap, move down, range as well, right? So you can't count a nice impulse in here, a 5-wave structure, 1, 2, 3, 4, 5, where you want to see a nice gap, a quick move in your wave 3 preferably, right? So that means one has to consider diagonals, but can you count a high probability a diagonal in here, right? No, you can't. Let me show you something I don't often do, which is grab the polyline and pull the polyline, right? Click the polyline from the start of wave 1 to the end of wave 1 to the end of wave 2 to the end of potential wave 3, right? Wave 4, wave 5. This is, one option for a diagonal. And yes, it's not valid, but I'll explain that in a second. Your other option is from the start of 1, end of 1, end of 2, end of 3. So now you take this lower one here, end of 4, end of 5. So now you can see the structures. So instead of having all the mess of the candles, just focus on these two. These are your diagonals. Is this a diagonal? No. Wave 5 is longer than wave 3. Wave 4 is shorter than wave 2. That doesn't work with any diagonal, not in a contracting one, nor in an expanding one. So that one goes out the window. Then we have this one over here. 1, 2, 3, 4, 5. Now diagonal, right, or at least something that's covered in the book, is ratio analysis, which basically has to do with time. I talk about Fib times in the book, Elliott Wave Principle. They talk about ratio analysis, but it has to do with, does it look good, right? Does it look good? What looks good to me is a 1, 2, 3, 4, 5. That looks good. Is this looking good? To me, it doesn't. If this is your wave 4 here, there's like, what is it, 2 candles to the upside over here, compared to this being your wave 2, right? It doesn't work nicely from a time and price perspective. It would have been a lot nicer if price would create A, B, C, right? And then get another drop to the downside. That would make a lot more sense. Any diagonal that I see here feels incredibly forced. In theory, right? In theory, I suppose, if we look at this diagonal option, there's not a hard invalidation per se. Wave 5 is shorter than wave 3, wave 4 is shorter than wave 2, and there is overlap over here as well, which is what you like to see. So it's not like it's invalidated, but it is incredibly forced to count a diagonal to the downside here in a wave C. It makes a lot more sense that whatever this is over here is not a wave 4, but that this whole structure therefore is not a diagonal, it's something else, right? Which then is what I like to count as a, right, if we do look at finished structure, just a triangle here and then a final zigzag to the downside, with on the lower time frames, 1, 2, 3, 4, 5. That's your A, that's your B. 1, 2, 3, 4, 5, right? So this is 1, 2 over here, 3, 4, 5. Now I haven't been to the 5-minute time frame, but I don't need to. That's the way that I would like estimate a 3-wave structure to the downside here from X to finish at the lows, right? So it feels incredibly forced. Now, if you put wave B over here, then of course this has to be a wave C to the downside over here. Now there is a, again, forced way to try and count a 5-waver here. If I go to a 5-minute time frame, then theoretically one could say, okay, you know what? This here is a wave 2, 1, 2, another 1, 2. So this is your second wave 2, another 1, 2. So that's your third, and then another 1, 2. That's your fourth wave 2. So we have a multi 1, 2 over there, right? Then we get to the first wave 4, second wave 4, third wave 4, fourth wave 4, right? You need as many wave 4s as you need wave 2s. Maybe there's 3 2s here and you would count 3 4s, but you get the idea. It's a multi 1, 2 versus then a multi 4, 5. Now the wave 4s, of course, are very big, especially at least these two here, compared to the matching wave 2. So that's not ideal. But that is like the only way that I could count a 5-waver to the downside here, right, on the lower time frames. Is it a possibility? Sure. Is it nice? No, wave 4s are very big compared to wave 2s, but it's not even the main issue. The main issue is, how do we count wave B, right? So wave B has to be a 3-wave corrective structure. Zigzags, triangles, flats, WXY. We can't count a zigzag here, ABC or WXY. You want to take out this high, which didn't happen. We can't count a flat here in an ABC because this here is not a 5-wave structure. High number 1, high number 2, we needed another one. And I'm not counting 1, 2, 3, 4, 5 because, of course, 4 moving below your 2 here for diagonals doesn't make sense as well. So there's no 5 wavers in here, so a flat goes out the window as well, leaving us with a triangle or WXY. A, B, C, D, E. D move below this low here of B, invalidation, unless you like to force a barrier, a triangle, A, B, C, D, E, where basically in a barrier triangle, you say like B and D end around the same low. But in the theory, you don't like D to move below your B. If it's a small little wick, right, then maybe you can get away with it. But the fact that a full candle closed below this, like, wait, let me clean this up over here. So you can see I'm on a 1-hour time frame, and this candle closed below this low, and the wick is quite deep as well. I mean, it's really forced, right? Very, very forced to get a barrier triangle in there. So triangles out the window, which then also leaves us with a WXY, which means W, zigzag structure, because there's no flat here. Then you have your wave X, and you need a Y, right? X, Y, A, B, C. No, we can't count a wave C here. 1, 2, 3, 4, 5, right? So if this is W, we need to end wave X at a later stage, maybe somewhere here, but then there's no flats because at no moment in time did B go deep enough. So as you can see, and I know this is like nitpicking and I'm going in incredible detail, but it's just the way I think when I analyze the market. I usually, of course, I do this in the background, but I mean, in my videos, I do like to communicate how I approach my counting. What do I look at? Why are things the way they are, right? It's not just this is the update, tada, continue with the day. There's a lot of education and thoughts involved, and I try to show you my arguments of why I consider scenario A better than scenario B compared to scenario C, etc. Right? So hopefully you learn something from this as well. So this is like the educational part of the video where, as mentioned, this WXY to me just doesn't make sense. It makes a lot more sense to me to then count it like this. The low is the same, right? The end is the same because in both cases, you're looking at a finished structure, right? So the low is the same, but it's how good is the count, right? And time is less of a problem than structure. Structure always comes first. So therefore, this looks a lot better than this. Okay, when you have a finished count. With regards to the news, Wednesday, Thursday, Friday, we have some high impact news today, 4 p.m. Make sure you watch out, right? We might get some volatility on the chart, also on Thursday and Friday, of course. So just make sure you trade safe. Then we get to the levels, right? So some of the support and resistance levels. Now, actually, high time frame point of control. So over here, to the downside locally, we have at 105.4K, we have a daily naked point of control. That's a new level. It's from yesterday. Over here, we have some support as well at 101. To the upside, you can see we have a pocket between 109.6K and 111.8K. Just mind you that before you arrive at that pocket, there are two value area highs. Right? So if you take a volume profile from the start of this range as well as from the high, then you can see you get two value area highs. Now, I don't really have any significant confluence with those levels. You could possibly consider a fib from this lower high here to the low, and then you'll see the 786 is overlapping with the first value area high, but I don't really have any other horizontals, so to speak, right? Like the levels that I have up here, but I at least keep an eye on it, and that's why it's on my in my folders, and because I keep an eye on it, I share it in my videos, so you can keep an eye on it, I suppose, right? So that's that. And you can also pull a volume profile just from this range over here, and then turn extended right off, right? And you can see you get another one here. Okay, so these are the levels to the upside and the downside. We are at a little bit of, or we now moving beyond a little bit of resistance, which I initially had at 106, right? We had some levels here in the previous update. And if we then get to the polylines and the probabilities again, then the polylines show you the expected price action of all the scenarios that I covered in this video. This line here is, of course, your wave Y line, where basically you just look for a continuation of the range, right? A longer sideways structure. This one here is a finished structure, and then you have a 5-wave up, a 3-wave down, a continuation. And this bigger one is counting a double 1-2 here. And as explained in the analysis, you want to see preferably volume increase, very volatile, and you want to see an extension, right? An extension to the upside. So WXY works better from a time perspective, as explained in the analysis, compared to a finished WXY. We keep an eye on both, but that is why the numbers are the way they are. The unfinished WXY has a slight preference at the moment, so that's important for my trade management, I suppose. The polylines of an unfinished WXY and a finished WXY with impulse up and overlap. Not very clearly written, but basically for a wave Y to the downside and a 5-wave impulse up and then a retracement, the price action is quite similar, right? So therefore, basically this section here and the wave Y polyline, those overlap. So it's similar price action. So in other words, the direction is similar. Only a double 1-2 would lead to strong continuation, right? 1-2, 1-2, get a big 3, 4, 5, 4, 5s at a later stage, and then start a retracement afterwards, right? Now, the reason why the unfinished WXY stands on the number one position here is because of time, but, you know, let's just wait what we get over here, wait for a bit of a retracement to come, as I explained during the analysis as well, and of course, trade accordingly. So yeah, a long video, a lot of explanation, a lot of education as well. Hopefully you enjoyed it. So I hope this video was helpful or valuable to you. On the left, you see a video on the simplest way to use and trade Elliott Waves without even counting. And on the right is the Elliott Wave educational playlist to help you understand more about Elliott Waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye-bye.